Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12 from T.S. Grewal's textbook 2023 edition, Accounting for Partnership Firms, Chapter 1, Accounting for Partnership Firms Fundamentals. And in this video, we will study guarantee of profit to a partner. So let us see some questions from the textbook. So let us see question number 85. Nimrat, Myra and Kabir are partners sharing profits in the ratio of 2:2:1. Nimrat is guaranteed minimum profit of rupees 1,60,000 per annum. Net profit for the year ended 31st March 2023 is rupees 1 lakh. Prepare profit and loss appropriation account for the year. So we are studying guaranteed profit to a partner. In this question, one of the partner, Nimrat, is guaranteed an amount of rupees 1,60,000 profit per annum. And the net profit given here is 1 lakh rupees, which is very less than 1,60,000. You see, such a less profit and more guarantee the partners have to bear. So the continuing partners other than Nimrat, that is Myra and Kabir, they have to bear the guarantee also, and let us see how it is to be solved. Solution 85. In this question, there is a net profit of rupees 1 lakh, and this profit is to be divided among the partners Nimrat, Myra and Kabir in the ratio 2:2:1. But partner Nimrat has been guaranteed a sum of rupees 1,60,000. So before dividing this, 1,60,000 is to be given to Nimrat, and the other two partners will not receive any amount, because 1 lakh rupees is not sufficient to it is not even sufficient to compensate or to meet the guaranteed amount for Nimrat. So there is a loss. So we will write here loss, and this loss will be borne by Myra and Kabir. Myra and Kabir in their profit sharing ratio, which is 2:1. And the loss here is, it is 1,60,000 here and 1,60,000 here. So 60,000 rupees balancing figure on the credit side, which is a debit balance, is the loss which will be borne by Myra and Kabir in their profit sharing ratio, that is 2:1. So 40,000 loss will be borne by Myra and 20,000 will be borne by Kabir. Now let us see question number 86. Ashmit, Abbas and Karman are partners sharing profits in the ratio of 3:2:1. Abbas is guaranteed a minimum profit of rupees 1,50,000 per annum. The firm incurred loss for the year ended 31st March 2023 for rupees 30,000. Prepare profit and loss appropriation account for the year. Now in this question, one of the partner Abbas is guaranteed a profit of rupees 1,50,000, but the firm has incurred a loss. So loss is also there to be borne by the other two partners, and at the same time the guaranteed amount is also to be borne by them other than Abbas, that is Ashmit and Karman. Okay, so let us see how it is to be distributed. In this question, question number 86, there is a loss. Net loss means it is a debit balance, so it will be written on the debit side of profit and loss appropriation account. Net loss of rupees 30,000. Now this even if it is a loss, then also the guaranteed amount to a partner is to be given. So there is no question of divisible profit to any partner but Abbas. There is no question of profit to be given to Ashmit and Kamran, but Abbas has been guaranteed a sum of rupees 1,50,000. So that has to be awarded to him, and which all these things will result in a total loss, that is divisible loss to the partners. 30,000 plus 1,50,000 is 1,80,000. So balancing figure, debit balance is rupees 1,80,000, which will be borne by other two partners, Ashmit and Kamran. In which ratio? In their profit sharing ratio, which is 3:1. So 3:1. When you break 1,80,000 in 3:1, it is 1,35,000 for the partner Ashmit and rupees 45,000 for Kamran. So this way the entire loss will be borne by the partners who are not guaranteed any profit. But the partner who has been guaranteed whatever amount, that has to be awarded irrespective of whether the firm has earned a profit or loss. Now let us see question number 87. P, Q and R entered into partnership on 1st April 2018 to share profits and losses in the ratio of 12:8:5. It was provided that in no case R's share in profit would be less than 30,000 rupees per annum. So this is the guaranteed amount to partner R, rupees 30,000 per annum. The profits and losses for the year ended 31st March were 2021 profit of rupees 1,20,000, 2022 profit of rupees 1,80,000, and 2023 there is a loss of rupees 1,20,000. Pass necessary journal entries in the books of the firm. So let us see the journal entries in the solution. Solution 87. Journal entry is to be passed on 31st March 2021. There is a profit of rupees 1,20,000. So profit and loss account, appropriation account debited 1,20,000 to all the partners, that is to P's capital account, to Q's capital account, and to R's capital account. And their profit sharing ratio is 12:8:5. So when 1,20,000 is broken in this ratio, partners P will get 57,600 and 38,400 and 24,000. Being profit to partners. Now guaranteed amount to R is not fulfilled. There is a deficiency of rupees 6,000. You see, R was guaranteed an amount of rupees 30,000, but only 24,000 he could get from correct distribution or distribution of profit. So remaining 6,000 will be compensated by P and Q. So P and Q will be debited. P's capital account debited, Q's capital also debited to guaranteed partner R's capital account. And this amount is how much? 30,000 is the guaranteed amount. He has already received 24,000. So 6,000 will be borne by the other two partners in their profit sharing ratio. See, 12:8. Fine. So they will be bearing in 12:8. You can reduce it to 3:2. So when 6,000 is broken in the ratio 3:2, the amounts are 3,600 and 2,400. Being deficiency borne by P and Q. So this was the journal entry for the year ending 31st March 2021. Now let us see the journal entry for 31st of March 2022. So profit and loss appropriation account debited because there is a profit of rupees 1,80,000. Now this will be given to the partners in their profit sharing ratio. So to P's capital account, to Q's capital account, and to R's capital account. In their profit sharing ratio, which is 12:8:5. So P will get rupees 86,400, Q will get rupees 57,600, and R will get rupees 36,000. Now here R is getting more than the guaranteed amount. R's guaranteed amount is rupees 30,000 and this is rupees 36,000. So he is getting more than the guaranteed amount. So no other compensation or deficiency type of thing will happen. So this is the solution for the second year. In the year ending 2023, 31st March 2023, there is a loss of rupees 1,20,000. So partner's capital account will be debited with this loss. So P's capital account debited, P's capital account debited, Q's capital account also debited, and R's capital account also debited. Let us give the entire loss to all the partners first. So profit and loss appropriation account will be credited. Appropriation account of rupees 1,20,000. It's a loss. Fine. And we are giving this loss to the partners in their profit sharing ratio, which is 12:8:5. So when you break this amount, it is 57,600, 38,400 and rupees 24,000 being lost to partners. Loss given to partners in their profit sharing ratio. But guaranteed partner R cannot bear the loss. This loss of R's portion's loss is to be borne by the other two partners. And a guaranteed amount of rupees 30,000 is also to be given to partner R. And the burden will be on P and Q. So P's capital account debited and Q's capital account also debited to guaranteed partner R. So his guaranteed amount 30,000 plus loss which is transferred to his capital account, both together is 54,000. This 54,000 will be compensated by other two partners, that is P and Q, in their profit sharing ratio, which is 12:8. So 12:8 is 3:2. So we will break 54,000 in ratio 3:2. It is 32,400 and rupees 21,600. Ratio is 12:8 or 3:2. If any other ratio is suggested in the question, in that case we have to distribute it in that ratio. But here profit sharing ratio. So this is the solution. Now let us see question number 88. P and Q were partners in the firm sharing profits in the ratio of 5:3. On 1st April 2022, they admitted R as a new partner for 1/8 share in the profits with a guaranteed profit of rupees 75,000. The new profit sharing ratio between P and Q will remain the same, but they agreed to bear any deficiency on account of guarantee to R in the ratio of 3:2. Now, in this question, what is special is that the deficiency of the guaranteed partner was borne by the other partners in their profit sharing ratio. But here in this question, it is suggested that such deficiency will be borne in a new ratio, means in a ratio which is given in the question, which is other than the profit sharing ratio. Their profit sharing ratio is 5:3, but the question is suggesting to bear the deficiency in 3:2. The profit of the firm for the year ended 31st March 2023 was rupees 4 lakh. Prepare profit and loss appropriation account of P, Q and R for the year ended 31st March 2023. Let us see the solution for this. So solution 88, profit and loss appropriation account by net profit. Net profit is always a credit balance, so it will be shown on the credit side of profit and loss appropriation account, and the amount is rupees 4 lakh. and this 4 lakh is to be given to partners. Profit, fine. Which are the partners? P, Q and R. Now let us check whether R is getting the guaranteed amount or not. R has been guaranteed an amount of rupees 75,000. So let us distribute this 4 lakh to the partners. So R first, है R is 4 lakh into 1 by 8. That is equal to how much? That is equal to 50,000 rupees. Now, after giving R 50,000 rupees, remaining profit has to be given to P and Q. So what is remaining profit? 4 lakh minus 50,000, that is equal to rupees 3,50,000. Now 3,50,000 is to be given to partner P and Q in their profit sharing ratio 5:3. So when you break this in ratio 5:3, P will get rupees 2,18,750 and Q will get rupees 1,31,250. Fine. So that should be the that is the distribution of profit. After giving 1/8 portion to R, remaining profit goes to P and Q in their profit sharing ratio. But here R's guaranteed amount is not fulfilled. R is guaranteed an amount of rupees 75,000. Fine. So what is the deficiency? Deficiency is rupees 25,000. And who will bear this 25,000? P and Q will bear the 25,000 rupees. So let us calculate it here. 25,000 rupees, which is the deficiency, will be borne by P and Q in the suggested ratio, and the ratio is 3:2. It is other than the profit sharing ratio. This is the uniqueness of this question, is that the deficiency is to be borne by the partners, by the other partners, in a special ratio given in the question, not in profit sharing ratio. Fine. So rupees 15,000 will be borne by P and rupees 10,000 will be borne by Q. So P less 15,000 and Q less rupees 10,000. So in this way, P's profit will be rupees 2,03,750 and Q's profit will be, when you subtract this, you get 1,21,250. So these are the profits to be given to the partners. To R 75,000, to P this much amount, and to R this much amount. So this I have shown you in working note, and you can also show it in working note, or directly you can put it in the profit and loss appropriation account as per your understanding and the way of style of writing. Fine. So P will finally get rupees 2,03,750. Q will get rupees 1,21,250 and R will get the guaranteed amount of rupees 75,000. This way entire 4 lakh will be distributed to the partners. Now let us see question number 89. A and B are in partnership sharing profits and losses in the ratio of 3:2. They admitted C, their manager, as a partner with effect from 1st April 2022 for 1/4 share of profits. C, while as a manager, was in receipt of a salary of rupees 27,000 per annum and a commission of 10% of net profit after charging such salary and commission. In terms of the partnership deed, any excess amount which C will be entitled to receive as a partner over the amount which would have been due to him if he continued to be the manager will be borne by A. Profit for the year ended 31st March 2023 amounted to rupees 2,25,000. Prepare profit and loss appropriation account for the year ended 31st March 2023. Here in this question, C is working as a manager and he is drawing a salary and commission. Fine. And he is to be converted as a partner. But if there is a difference in his profit as a manager or as a partner, the difference will be borne by partner A, not by partner B. That is the thing we have to understand here. When C becomes a partner, he will cease to be a manager. Now, in capacity of a partner, if he is receiving more amount than he being as a manager, then that difference amount will be borne by partner A, not by partner B. It means B sees him as a manager, but A sees him as a partner. Fine. And B wants his income or his share of profit taking C as a manager, and A wants his profit taking C as a partner. I hope you are understanding this. So that increase in amount of profit to C, when he is changing from a manager to a partner, that difference in amount will be borne by partner A. Let us see the solution. To begin with, let us see C as a manager. C as a manager. As a incapacity as a manager, C is getting a salary of rupees 27,000 per annum. And second is C is also getting a commission of 10% of net profit after charging such salary and commission. So profit is how much? 2,25,000, and the condition is after charging salary, so we have to deduct after charging salary, but this commission also we have to deduct, but at the same time this commission we have to calculate. So that is 10%. So 10 divided by 110, because the phrase used here is that after charging such salary and this commission. So we have to divide it by 100 plus percentage of commission, that is 110. When you calculate this, you will get 18,000 rupees. So his total remuneration in capacity as a manager is rupees 45,000. Fine. Now let us see C as a partner. Fine. From the profit 2,25,000, C as a partner will receive 1/4 share in the profit. So 1/4 share is how much? Rupees 56,250. Fine. So there is an increase. As a manager he is getting 45,000, but as a partner he is getting 56,250. So increase or difference is how much? Difference is 56,250 minus 45,000, that is equal to rupees 11,250, and this 11,250 will be borne by partner A, not by partner B. Now I hope you are understanding the entire thing properly, and this is what we have to show in profit and loss appropriation account. So let us go to profit and loss appropriation account. Solution 89. In profit and loss appropriation account, there is a profit of rupees 2,25,000. This is 2,25,000. I am writing it on the column amounts column because C will be converted from manager to a partner. But B wants that his income be decided on C as a manager, not as a partner. So as a manager, C is getting a salary of rupees how much thousand? 27,000, and his commission also as a manager rupees 18,000. So when he is a manager, the net profit remaining for the partners is rupees 1,80,000. Fine, because C has been treated as a manager. Now this 1,80,000 let us distribute to partners A and B. Profit to A and B, and their profit sharing ratio is as given in the question 3:2. 3:2. So when 1,80,000 is broken in 3:2, A will get rupees 1,08,000 and B will get rupees 72,000. So B's condition is satisfied because B wants that his income should be such, taking C as a manager. So taking C as a manager, the divisible profit for A and B is 1,80,000. When broken in the ratio, profit sharing ratio, A is getting 1,08,000 and B is getting 72,000. Now let us convert C as a partner. Now when C is taken as a partner, C is getting 27,000 rupees, as already has received rupees 27,000 as salary, and he has also received 18,000 as commission. Fine. And 25,000, 2,25,000, 1/4, which C will receive as a partner, is how much? 56,250. So 56,250 will be the difference amount 11,250 will be contributed from A. So we will deduct 11,250 from A. In this way, A will get amount 96,750. So this is the amount for A, this is the amount for B, and this is the amount for C. And the total is how much? 2,25,000. So here we see that both the conditions of A and B are fulfilled. B got his income taking C as a manager, and A got his income taking C as a partner. So this way the question is to be understood and solved. I hope that you have watched the full video and have understood the concept very well. In case you are having any doubt, then please put it in the comment section. Thank you so much for liking, subscribing and sharing this channel. Thank you so much for watching this video.